Good morning, everybody. Welcome to another Market Report brought to you by Mike Bjork. Today is Thursday, August 18th. We got a few economic data to go over today, and today will be the last of it this week. Tomorrow there's nothing on the agenda, so a lot of that will come up to earnings reports as well as any geopolitical items that may pop up here. So today we got the weekly jobless claims. So last week we had 266,000 people apply for unemployment. Forecast is supposed to be in that same range at 265. And I came in at 262,000, so dipped about 4,000 people by applying for unemployment. This is the 76th week, one of the longest in recordings of being under 300,000 claims. So this is obviously good news. We're seeing the labor market improving here. So obviously very good news here. Philly Fed, this is the manufacturing in the Philadelphia region. We've been kind of seeing some hit misses over there. This time in July we had a negative 2.9, so contracted. It was supposed to jump up to 2.0, so just above to expanding a little bit, and it hit it. So right on the number at 2.0 here. Leading indicators, this is kind of important because it kind of gives us a gauge as to where the economy is moving. It looks like by the gauge of it, we had June's reading at 0.3%, July is showing at 0.4%, that we're still kind of growing at a very, very modest pace, but still growing, which is the important news, that we're still growing, but we still need a lot more than this to get this economy moving a lot further ahead. We're just kind of limping along, so to speak, but we're still not as bad as many of the other countries that are out there that are dragging a lot more than what we are. Right now, the stock market's up. A lot of it is due to yesterday's FOMC minutes being released. So this is kind of post news, and basically what they're seeing is that Fed members are split. There's a whole lot of opinions out there between the Fed members as to when they should raise rates. So it could potentially happen this year. Most likely, if it does happen, it'll probably be in December. September is basically at 18% chance of it happening. In December, it's kind of a 50-50 split as to if it will happen or not. So this is what they're kind of looking at. Right now, inflation's very low at 1.6%. The Fed would like to have it up at 2%. Labor is showing some improvement, but however, the GDP right now is not very high. It looks like we could be potentially having less than 2% growth here for our GDP here, which obviously is not very good. Things are just sustaining itself, so to speak. So we need to keep that growing so that way we can continue with the labor market. And most of that, of course, is housing right now. Housing is kind of helping those that economy out in that way, kind of like post credit crisis. Oil is actually up too, so that's another reason why the stock market's like it. We had some earnings reports that came out. Walmart, you see expectations and stuff, but oil jumped up to about $48 a barrel right now. And then be careful later today. We do have some Fed speakers coming out today, including Fed's Dudley, the one that kind of rode the markets with his comments saying that interest rate hike is approaching. So don't take it. September's not off the table. He's out in New York, and so markets kind of dissipated after that comment earlier in the week. I think it was Monday, if I recall correctly, that he made that comment. So he's speaking today, as well as a few other Fed members who will be speaking today. He carries a lot of clout because he was pretty tight with the Fed, Janet Yellen and stuff. So people listen because he's kind of in her ear, so to speak. Bond market, we're up. So after the afterward the FOMC news yesterday, as you can see, we were down, hanging down just barely at the 50-day moving average, and we shot all the way up past the 25-day moving average at about the 10-day moving average. Today we're up about 3 basis points from where we left off yesterday, so not really enough to spike a price change for the better. But if they didn't price in yesterday, you're going to see that today in today's pricing. So definitely from this morning and yesterday's morning, you're probably going to get better news. So both the stock market improved off the lows yesterday, as well as the bond market. So as more money came into the markets, as we mentioned, some of the money was on the sidelines. So some of that money came back into the markets yesterday after the Fed released their minutes. All right, folks. again, we're trading above right now a 10-day and 25-day moving average. We'll see if we can work our way back upwards. As we kind of went this, we've been kind of hanging in this sideways more, but there's been some pretty big swings, as you can see here, in that sideways pattern. Again, we'll see if we can try to continue our upward trend and see more improvement in the interest rates. All right, folks, have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.